Another edition of the Startup Hour radio show. I'm your host, Patrick Chifuambo, here as always with my co-host, Mapich Saka Jr. Welcome to you. We're also joined by our guest this morning, Mr. Jito Kayumba. Today on the Startup Hour show, we discuss investing in grey matter infrastructure with Jito Kayumba, partner at Kukula Capital. Kukula Capital is a joint venture between Danish and Zambian partners. The name Kukula is associated with growth in the local dialects of Zambia. Jito is a partner at Kukula Capital, a leading private equity firm in Zambia. Jito also serves as a board member of on numerous successful SMEs and large corporations. Kukula invests in growing small and medium-sized Zambian businesses with capital and expertise. The company's aim is to build a diversified portfolio of investments and provide exceptional financial and social returns for investors whilst creating long-term value for the portfolio companies. The company is regulated by the Securities and Exchange Commission of Zambia. Kukula has a strong market network which enables it to identify companies with attractive long-term growth prospects, securing a strong deal flow. Jito believes in a strong work ethic with an aim of generating sound returns and shareholder value while striving to create a positive social impact. All his endeavors are guided by ethical and moral principles of equity, integrity, and prudent delivery. A very good morning to you.
Well, good morning. Thank you. Thank you so much. That was an awesome introduction. Goodness.
We're glad you could make it this morning, Jito.
Thank you.
First things first. Let's start off with a quote, as we always do with our guests and our listeners, and it goes as follows. Yeah. And I quote, "As most people get older, they love money and security, and more, and creation and construction less." That's by John Maynard. First things first, Jito, what is investing in grey matter infrastructure?
Okay, you guys are going to hit me with some tough ones. All right, well, essentially, obviously, grey matter is the part of the brain which is responsible for cognitive functions, processing information, where essentially intelligence comes from. So grey matter in that regard, from an investment perspective, is essentially highlighting areas around mindset, so of course, there's numerous elements that affect grey matter. One is nutrition. I think whenever you have a situation where a country doesn't have sufficient supply of nutritious food with all the different vitamins and minerals, grey matter is affected. So, of course, we have stunted growth in Zambia, so there has to be investment in that, which affects directly grey matter. The next is education. So grey matter responds to stimuli, outside stimuli. So whenever you're in a classroom or in a home, as they say, charity begins at home. That's the first environment where we learn, matters that affect our grey matter. Then grey matter essentially creates value, because once you're processing information, you're processing the education that you're receiving, and then you go ahead and translate that into being a useful member of society. That's where grey matter matters most. So at the core of every economy, we can say copper is the mainstay of Zambia, but the truth is grey matter is the most important natural resource that any country has.
Do you think that it has been overlooked? Investing in grey matter, is it something from a household to a national level? Do you think that is something that has been overlooked or not emphasized enough?
Absolutely, especially from a mindset perspective. When you look at the Maslow's table of needs, of course you've got the most basic, that are very carnal, that are very based on survival, like your need for food, need for shelter and the like. Now, once you overcome all those needs, then you can get into the more transcendental state, where you're now looking for self-actualization, looking to acquire information that can now progress you in a more intellectual way. That's far beyond the needs of from a carnal perspective. So when I say it's overlooked, I think as a country, we're a young country, we're almost 53 years old.
Yeah.
From a free market economy perspective, we're only about a couple decades old. So we've not had sufficient time. So if you compare us to other countries, the US just turned 230 something, was it 40 something? So we're infants as a country. So because of that, we were first of all struggling for political and social sort of liberation. Now we're in the economic phase. So now in the economic phase, this is where grey matter matters most. So it's really a timing issue. So it's now relevant more than ever. And this is why I appreciate you guys having a show like this, because you are also participating in the investment in grey matter, and with, simple people like myself that come on your show, share a few insights that enable people who are listening, parents and the like, to essentially apply some of these grey matter principles and mindset principles that improve the capacity of people, essentially.
Okay, just real quickly, walk us through, and I'm asking this from maybe your professional background.
Yeah.
How do we go about, and because we talk equity, you know, we in the preamble, in the introduction, we said, you know, Kukula is focused on equity and whatnot.
Yeah.
How do you go about telling client X that they need perhaps to invest in gray matter?
Okay.
Because we could talk about infrastructure from the physical infrastructure that we're laying out as a country, but how do you go about investing in smart affairs, for lack of a better phrase?
Okay, I think I think the investment in grey matter is a byproduct of a good environmental, social, and governance procedure. So every venture capital or private equity firm has what they call ESG components within the investment guidelines.
Okay.
And so the environmental bit is ensuring that you invest in companies that are not having any adverse impact on the environment. And then, of course, there's a social element which, of course, requires there to be skills transfer, skills development, sustainability, job creation, which does translate into grey matter development. So it's really just a byproduct of value creation out of investment, because whenever a company receives, a huge amount of capital, it means that they have the capacity to now increase the number of resources they have in terms of assets that generates more cash, which has a spillover effect into creating value in a community, which of course there's a spillover from the people that are employed, who educate their children, who educate their relatives, and dependents, and I think with that, I would say it's not something that is conscious on an investor's mind that we're going to invest in grey matter. It's something we should be conscious of. So whether you're, for example, good friend of mine, Monica Musonda, with her company Java Foods, with their cereal line, they've started fortifying it with certain vitamins and minerals that enable for grey matter development from a nutritional perspective. So grey matter really has to be looked at from two angles: nutritional as well as environmental. The environmental bit is what we're doing. It's more information based, it's more cognitive and things of that nature. And then, of course, so really I think those are the two elements. But the truth of the matter is it's not something that is on the mind of most investors, but it's something we should be more conscious of as part of our social element in our investment.
Okay. Yeah. So for instance, if one was to invest in skills development, would that fall under that category?
I believe so. I think that whenever you have a situation where people are taking on new skills that they didn't have before, skills that enable them to sustain long-term careers, that enable them to create more value in the companies that they work for, that enables the companies to be more profitable, more efficient in their production processes. It's, in a sense, that is a way of building up grey matter. Because at the end of the day, the beauty, and the one thing I love about this industry that I'm in is, venture capital, is that when you invest, your ultimate goal is to grow the company, to build its valuation. Because if you invest in a company at a certain value and you want that value to go higher, so that when you do exit at a later stage, you make a significant profit. But the only way you can achieve that is that if you create value by improving capacity of the employees and creating a strong track record, and that's necessary. The element around the social factor is necessary to achieve those at least the investment fundamentals. Yeah.
Very interesting. It's good that we're now talking about your industry. Going forwards to being a venture capitalist versus being an entrepreneur.
Yep.
What would you say is the better option?
Oh man, that's a really good question. It's a tough one. I'm biased because I'm a venture capitalist, so which is also entrepreneurship in its sense. Because being a partner, essentially meaning I'm a shareholder in a company where myself and the other entrepreneurs that run the business are essentially engaged in an entrepreneurial venture which supports other entrepreneurs. Of course, the grass tends to also be green on the other side. So we look at entrepreneurs and we say to ourselves, like, for example, if I see, let's say you open up a factory that manufactures shoes, for example, I would admire that because you're creating direct value and you're directly involved in value creation and you're building up, I guess, how do I say, the business directly, whereas we are somewhat indirect because we sit in your business as shareholders. The value we bring is by bringing capital and bringing some expertise, some governance, some strategic direction. So we don't participate in running the businesses, which we admire very much. So really, it depends on what's your flavor. So it's not really a matter of what's better than the other. It's apples and oranges.
I want to come back to the issue of venture capital.
Yeah.
What is that in layman's terms? If you can break it down for us.
Sure. One thing I know how to do is break it down simply, and I think it's something that I learned a long time ago. That if you can simplify the most complex things, you'll be very successful, because things become and I'll explain a few principles that sort of came out of that. But essentially, to answer your question, venture capital is a business model where a venture capitalist, who's a person with money, invests in a business, providing funds to a company in exchange for shareholding. That is simply what it is. As opposed to debt, for example, where you lend company money where they have to pay you back with interest. In this case, you become a shareholder in the company that you invest in. And then, of course, you accrue value by getting dividends and capital gains. So, for example, when the company becomes more valuable and you want to sell, it essentially means that. So I'll give you one case. You invest in a business that's worth $2 million. You put in $1 million, essentially meaning that you're going to have 50% of its shares. If that company in 5 years quadruples in size, or let's say gets to become a $5 million business, it essentially means the value of your stock is now $2.5 million. So that's really the long and short of venture capital and how you realize gains from it.
In our current economic context, is it prudent to be in the kind of business you're in, venture capitalism?
Absolutely. If you're privileged to have a little bit of money, it's definitely prudent, because it enables you to build long-term wealth. I mean, if I'm a shareholder in numerous entities that are turning over significant amounts of revenues and creating value, and it also builds your net worth. So if you're investing in multiple entities, whether on the listed on the listed board, which is the Lusaka Stock Exchange, on the listed market, or in the private equity space, those companies that are run by, of course, fantastic entrepreneurs with boards in place, to take care of making sure that your money is monitored and that the business is held accountable. It definitely is of great value, and it's part of why more Zambians need to be involved in such things. You can be involved in it not necessarily as a direct venture capitalist, but by investing in a venture capital entity that's sitting on funds, and that's something that every venture capital fund entity does, is that they open up to private individuals. So if Patrick and Mape got some spare change, they can come to us and say, look, we hear you guys are fundraising for your next round, and you guys will be investing over the next 10 years. We'd like to write you a check for X amount. You become basically you subscribe to the venture fund, and you have a piece of the venture fund, and then your money is mixed with ours, which is mixed with other investors, which include family offices, pension funds, and other professional investment entities. And then over the years, as we invest in those entities, the percentage of the venture capital fund that you hold will correlate into the percentage of the asset that we invest in. So let's say we invest in Betanal Finance, for example, which is a fantastic company that we invested in a couple of years ago. Then you realize value from that, because the dividends are accrued to the venture fund and the capital gains that are accrued to the venture fund. Once the venture fund reaches its maturity, when you get your money back, should be significantly higher than it was before. So that's essentially how people can get involved in it. So it's good for sustaining your wealth, so preserving your capital for future generations. And it's also, this is how wealthy people in other countries pass on wealth. There's intergenerational wealth. This is the reason why today someone like Paris Hilton can benefit off a company that was developed 100 years ago. Not necessarily that it is invested through a venture fund, but either in a trust or a venture fund that essentially holds its assets together are where they realize their wealth from. So I think as Zambians, we need to think bigger and be more open-minded. Lots of Zambians, when they have cash, they want to go build flats, they want to do things of that nature that everyone else is doing. But there's actually other mechanisms in which you could build wealth and sustain it.
I want us to talk a little bit later. We can talk about the mechanisms of building wealth and the risk maybe associated with it. But before we do that, a quick one. How do you, as a venture capitalist, how do you identify companies that that you might be interested in investing in? Because Mwape there might be listening right now and saying, hang on, I've got a pretty solid company. I think Jito should talk to me.
Very solid.
Absolutely. Okay, well, I think we look at a number of fundamentals. The first is actually the entrepreneur. You want to get a sense of how much integrity does this person have. I think the journey of success and building a successful career in whatever you do starts with you as a person. You know, what is your reputation? Do you have a good reputation? Are you sound? Are you, of the utmost integrity? So that's usually the first. The next is now your business model. Does it have good governance? And that's the number one thing I can say outside of a person's integrity is, does this company have the capacity to maintain a good amount of accountability? So what a board does, and of course, as you mentioned in the introduction, I sit on a number of boards, and the reason the function of a board is so important is that it holds the company accountable. You're not only holding the financials accountable, but also the fact that you have managers running the business, the chief financial officer, the chief executive, the HR, all the different key elements of the business are held accountable by the board. They're responsible for hiring and firing, the executives of the company. So it keeps them on their toes and keeps them running the company properly. It also ensures that the monthly management accounts are coming out on time, and you're able to review how a company is performing on a quarterly basis, because obviously most boards meet on a quarterly basis, and then at the end of the year, once you have your annual general meeting, you're able to now sit with the shareholders to review the performance of the company over a period of a year. So that's why governance matters so much. It's because of accountability, and part of accountability, which I already alluded to, is maintaining up-to-date management accounts. That's one thing that I can't stress more. I mean, that is more attractive than even if a company is generating a lot of cash. I mean, I know big companies in Zambia which are very profitable, but I really just don't have it in terms of a good governance structure. They don't have, maybe the board is a husband and wife, and all the decisions are unilaterally done by the husband, and that's scary for an investor, because you know that when you pump money into that company, obviously boards make decisions around, let's say, purchases. The board will approve, let's say, a contract between the CEO and the company. The board will approve, let's say, purchases. Let's say the CEO wants to buy a Mercedes-Benz, for example, using company funds, the board approves that. Now, in an instance where there isn't that level of accountability, imagine you put a couple $1 million in Mwape's business. Next thing, he's in Dubai with his lady, enjoying at the whatever hotel out there, and that's something that I think many human beings have the propensity to do when they're unchecked, and this is why laws and things of that nature matter. So the same way a government needs a constitution, so does a company. It needs rules and regulations, and people to monitor those rules and regulations and ensure that they're being followed, aside from the core business, which is also an important element. So I've alluded to integrity of the entrepreneur, a good corporate governance structure, as well as financial statements. And then everything is secondary. Business plan, we don't care. Some people want to make a business plan super shiny, and like I get random calls. Yeah, I've got this business plan I've been working on it for 3 years. I'm like, just even a one pager is enough. We've been in this game long enough to ascertain whether or not something makes sense, because we invest in market studies. Our team of analysts are very well versed in things of that nature. So we already kind of have a sense of which sectors are fast growing. Fast moving consumer goods. We know we have a fast growing population. We know that things, food and agri goods, particularly processed agri goods, is a very sexy sector for a lot of investors who are looking to invest in from the foreign perspective. So most investors we talk to whenever we travel who are looking to invest in our fund, they always ask, can you make sure that agri is in your investment sort of priority list? Then of course we took, I wouldn't say necessarily a risk, but we did tech. So in a way, outside of the elements I've mentioned, the last piece is really on the assumption of where the economy is going. So we know that we're in a very interesting digital shift as Sub-Saharan Africa, because of the fact that there's the proliferation of mobile money, there's blockchain, there's Bitcoin, and internet is growing, so accessibility to data is increasing as well. So you find that different business models can now be developed and that are appendages to other sectors. So for example, I'm impressed with there's a young entrepreneur called his name is in Java. He did with Musanga. I think he's somebody who I think is definitely got a good future ahead of him. Because
currently as a Mandela Fellow, I believe.
Oh yes, absolutely. Yeah. He's actually he's in the US right now. So we hope he's learning as much as possible so he can come and roll up his sleeves and get to work when he gets back and builds his company. And who knows, one day he can come knocking and we can sit and talk. So anyway, that's really the long and short of it, of how venture capital works and what we look for when we're looking to invest.
All right. This is something I'd like to. It's something we've been debating, me and the few friends. There's the thought that fundraising from a venture capitalist dilutes the founder's stock versus giving an initial public offering and going public. So, which is it true?
They both dilute your stock. But you see, you should never be afraid of dilution, because dilution is one of the first consequences of having money coming into your business. So an IPO, which is obviously when you go and doing a listing, putting your company in the public domain on the stock exchange, you're still opening up your company, you're adding more shares to your company, and you're enabling others in the market to acquire a stake in your company. And naturally, automatically, whether it be Facebook, who did the IPO a few years ago, or Snapchat, who did it recently, or Madison in Zambia, who did it, I think, a year or so ago, they were all diluted. Whether it's Lawrence Kuto, I think, had majority shares, his shares were diluted, which is okay, because now you're no longer owning, 60% of a small business. You're now owning 20% of a large business, which is far better. If I can own 1% of a multi-billion-dollar corporation, I'd rather have that than 100% of a $100,000 corporation. So don't be afraid of dilution. I mean, the wealthiest and most successful people in the world, in Europe, in the US, you name it, all own very little stakes. 5%, 10%. But if you look at their wealth, it's insane. So it's something that entrepreneurs should be open to. Of course, people are concerned about releasing control. So that's why negotiate with your lawyers, minority protection rights in your shareholders agreements. Ensure that you have board representation so that if anything happens, your interests are protected. So these are the things that you learn in time as as in the journey of an entrepreneur.
Okay. Jito, I want us to take a short break, but I want us to come back perhaps on the mechanism of accumulating wealth and the risks associated with it. And then also maybe we can touch a bit on integrity and get your views on how you think Zambian businessmen fare in that category, and also the culture of good governance. We'll take a short break right here on the Startup Hour.
Great.
The Startup Hour, giving entrepreneurs education, motivation, and inspiration from successful entrepreneurs from all corners of the country.
If you're just joining us, a very good morning to you. Today on the Startup Hour, we discuss investing in grey matter infrastructure with Jito Kayumba, partner at Kukula Capital. Kukula Capital is a joint venture between Danish and Zambian partners. The name Kukula is associated with growth in the local dialects of Zambia. Jito is a partner at Kukula Capital, a leading private equity firm in Zambia. Jito, before the break, you were talking about the need for one who's an entrepreneur or a businessman to have integrity.
Yeah.
Will be very straightforward.
Yeah.
How are the levels of integrity of Zambian business, in your view?
All right, I need to be careful with my words.
Yes.
These are sensitive times. So essentially, it's about being honest, first of all. The first is when people know that you're trustworthy. If I lend, Mape money, if he pays me back in the time frame that we agreed, then he's building up his, my perception of his integrity. The second is, if you're prudent in your ability, I think you also mentioned earlier that one of the values I try to ascribe to is prudent service delivery. So when you commit to delivering a certain service. So let's say you're a consultant and you do environmental impact assessments. If you tell your client you'll be done with this report on July 18th, and it's done on July 18th, that adds to your integrity, which also contributes to your reputation. And money follows integrity, and it follows reputation. When you're known for creating value in a consistent manner, you essentially will be significantly more successful. So it really comes down to high ethical and moral values, being honest, being prudent, not engaging in corrupt practices, all sorts of malfeasance. The reality is, when people engage in business with, particularly those who are exposed to government, never want to be involved in businesses that depend on government because of the risk that exists to being exposed to dealing with a procurement individual or an individual who's in a decision-making position who unlocks the opportunity by receiving some sort of a piece of the action. Where it's an elephant in the room in many business conversations. And the truth tends to hurt, and sometimes the speakers of the truth tend to be casualties, so please forgive me. But the reality is that's one of the elements that make up a person of integrity.
Okay. Yeah. In terms of good culture, good governance culture, how do we fare as Zambian businessmen?
Okay, I believe that we have a long way to go because of our infancy. I think I alluded to the point that from a free market economy perspective, we're just under 3 decades old. So Zambians have not been doing business freely from probably we only started around the time the MMD, let's say, came into power, because that's when the economy is liberalized. So there's a lot more entrepreneurship. So knowing how to structure a company in a way where governance is, there's clarity on the procedures, having meetings with minutes, referring to those minutes the next meeting, ensuring that you are dealing with all the matters that arose from the previous meeting, progressing the business in that regard, being accountable. I think Zambians like the idea of I'm my own boss. But the reality is, for you to be a good entrepreneur, you should still be accountable to someone. So if I own, I'm an owner in Kukula Capital, but I still report to a board who I have to be accountable for. So I can't make a decision tomorrow, that let's say next week everybody flies first class on vacation on the company account. The board probably won't be too happy with that. And, in my mind, it might be a great idea because I'm going to be a beneficiary of that. But if it's not good for the company, then ultimately the board should be able to veto that. So the governance culture at this point in time for small businesses is almost non-existent. Usually governance is imposed on public listed companies. So for example, I sit on the Airtel board, which is one of the largest public listed companies in the country. And that's, the high standard of governance you can ever imagine. I mean, it's because you're reporting to numerous regulators from ZICTA to BOS under Airtel Money. You've got LUCE because of the listing, and I think a few other regulatory bodies who have to keep their eyes on us. And we have to maintain, because we obviously have directors' liability as well. So if anything goes wrong, we are liable as directors. So governance from that perspective is done properly because you've got of course lawyers who obviously have to sit on the board to act in the function of company secretary, who maintain the governance process, who make sure your board packs come out on time and the like. So that's really just an example of the bipolarity of the non-existent governance in the small businesses and the implementation of governance in the larger companies.
Amazing. Jito, you sit on boards, you have people you're reporting to, you sit in meetings. So what does the typical day in the life of a VC look like?
Okay, well, the way it is, you go through so the phase one of a VC. So if you look at let's say you're running a 10-year fund, because we run numerous funds. So let's say you set out to raise, like right now we're going to go aggressive. I'll be completely honest with you, the country is not very attractive right now to international investors. This is not coming from me. This is coming from the feedback I'm getting internationally. But we're in the process of going out there. So the reason I'm mentioning that is because it's helping you understand the different phases of a venture capital sort of endeavor. So the first is you'd fundraise. You create the system, you create the structure, you get your regulation through SEC, as you also mentioned earlier. And then once you have everything set, you've got a custodian account, which is sitting with Standard Chartered. So the account is there. So now you as partners, you essentially sacrifice your money into the fund, because every investor wants to ensure that, there's a term we use in our sector called skin in the game. They want to see that if they put money in your fund, that you've got something to lose as well. So we put in our own money, which is, the first time I came on board in Kukula, I literally had to put in everything I had in order to get to the point where I'm at, and we thank God that I was able to recoup that. But so it starts with fundraising. So you go out into the market, you meet pension funds, you meet high net worth individuals, locally and internationally. They place funds in your account. And then once you're now sitting with the funds, you now start looking for companies. You take meetings, rare cases people walk in But in most cases, you're out there looking. And there's a mechanism to do that. You build relationships. You've already got your target companies in mind. I mean, I was mentioned, there's some companies I always had in mind that, this Better Now Finance looks like a nice company. Maybe one day we invest. Then eventually meet the entrepreneur. Next thing, the deal happens. I used to hear about Mawana from time to time. I thought this guy's an awesome guy. He's got capacity to do great things. And then the concept was clear. And I thought, hey, let's make it happen. So that's the next phase, is investing. Then after investing, you now structure the businesses where you have the board set up properly, and you put in all the different mechanisms to make it function efficiently. And then you consolidate. You make sure that the companies are not, that the money that's been placed in those companies are being applied in the way that they were planned. So you grow the company so that by the time you're preparing for an exit, and just to clarify what exit is, every venture capital firm exits the businesses they invest in. By exit, basically saying you sell your shares. Either, number one, back to the shareholder, the person the founder. The second is to another venture capital firm who's looking to come in and maybe at a higher level. The third is listing the company on the stock exchange, so you exit through the stock exchange. And the fourth is the most exciting, because that's where most people make a lot of money, is through a trade sale. So, for example, let's say I open a small butchery today. It's doing very well. I grow it sufficiently, build a nice national footprint, and then Zambia comes to me and say, "Hey, you're in our turf, and your business is good. So I think we could buy you out, rebrand your stores into Zambia." That's a trade sale essentially, where your competitor buys you out, which is the single source of wealth, the single largest source of wealth for a lot of multimillionaires in the US in particular, is through trade sales.
Just a quick one. So as a business, I come to you as a young business and I say, well, Jito, we're growing too fast to handle our own workloads, but we can't afford to hire new employees. What's wrong with our business model?
Okay, so in a situation like that, we look at two things. The first thing is you have to ensure that your asset base is matching, or at least the current capacity of your assets is able to fulfill the value proposition that serves your clientele. So, and then once you realize that that's sustainable, if you're generating sufficient cash to have a certain amount of retained earnings that emanate from your free cash flow, you can then allocate that through essentially maybe cost cutting in certain areas, taking on some debt through the banks to, let's say, bring on maybe acquire. So let's say you're a trucking company and you want to buy extra trucks because now there's a need for, let's say, maize in Kigali, which is actually the case right now. And then you're now moving those goods into that part of the world, knowing that there's a client ready to pay for it. And then you're essentially organically building up. Of course, there's a fear of growing too fast. We've been in a situation where we've capitalized the company and it grew too fast and it was very difficult to run. And then you start hemorrhaging money. And so it's I guess there's a case by case. You have a gut feel for when you run the company. So it's a very difficult question to answer because the instances in which I've seen that are very different. Yeah.
Okay. Jito, quickly, let me take you back to where as a venture capitalist you would step into company X and then see an opportunity there to grow that company. How do you ensure that this particular company is, and I allude to the words you use, say the company is functioning properly? How do you put in those mechanisms to ensure that, one, obviously your capital is secure, and then two, that the founder or the owner of this particular company is adhering to good governance guidelines and issues?
Yeah, that's a great question. I think the first is you have to look at the historical trend. How has the company been performing over the last 3 years? So when you look at the historical financials, you look at all the management accounts, the annual audited reports for the last 3 years, you can see a trend, and that trend you could either influence its trajectory post-investment. So let's say this company we've invested in over the last 3 years has been declining, but at least we know where it's coming from. We know that it's already got an inbuilt clientele, so there is capacity for it to generate cash. All it needs is correction here and there in terms of cost cutting or maybe adding new product lines or revenue streams based on its current model. So those are things that we look at. So once we invest and we acquire the assets necessary to generate more cash in the business, we sit on the board in that company. So we ensure that, so we're watching the money, and we have access to, so we tend to appoint the CFO in the company to make sure that there's a strong chief of finance who essentially comes from a background that is of the most highest standard. So they're able to implement mechanisms to watch the money and report back into your system as a venture capitalist to ensure, like, look, this is how we're costs are managed, this is how our revenues have increased. So from that perspective, it's easy to monitor when you have the governance structure. And the entrepreneur, usually you've already done your due diligence. You've already looked into the past. You've assessed every contract they have, whether it be employment contract, every contract that, for clientele, whether they've got litigation in court, whether they've got debt, whether they've got any other issues. So the historical trend tends to give us a good sort of picture of how things will be moving forward.
So as an SME, how important is it to have audited reports, to have management account reports, regularly?
It's absolutely necessary. It's like, going to apply for a job without a CV. You have to have your historical financials, because that's the only way the venture capitalist or even the bank is able to know where you're coming from and your capacity to run a sustainable business. So it absolutely is necessary. Entrepreneurs don't like it when we say things like that because of the additional cost, because it's also cumbersome, having to do your accounts and so on. But the reality is that's what builds a good case for an investment. We've invested in companies primarily because of good governance. The business model is mundane, just normal, business, nothing particularly extraordinary. It's not crazy profitable, but we realize that we can realize a stable return that's at a certain yield that's not astronomical, but because we know our money is safe in this entity, let's go ahead and invest in it. Yeah.
Well, we'll take a short break, and when we come back, we want to touch on the issue of where the economy is right now, and also a little bit later on, maybe perhaps as we wrap up, we can touch on the mechanisms of accumulating wealth and the risks associated to it. This is the Startup Hour. We'll be right back.
The Startup Hour, giving entrepreneurs education, motivation, and inspiration from successful entrepreneurs from all corners of the...
Jito, before the break, we spoke a lot about different points, but you also alluded earlier to the perception that Zambia gets outside in terms of how our economy is faring, because obviously as you look for partners and people to pump in some money into Kukula, you're also looking at foreign investment, isn't it?
Yes.
Direct capital injection.
Absolutely. Well, the macro element, the macro piece is very important because naturally we don't have a lot of what they call a domestic resource mobilization, which is just the capacity for sourcing of local capital. We source 99% of our money abroad. And a person who's sitting out in Copenhagen or in London or in New York who's never been to Zambia and just sees Africa as a place where there's lots of wildlife and poverty and war and things of that nature, which is really negative. It's part of the narrative over the last number of years. So the expectation that their capital will be safe in an environment is very low. So that's why they add a risk premium to that. So whenever you're talking about Eurobonds, if you think about a Eurobond in, let's say, China, let's say Japan or another jurisdiction like Germany, you find the yields are very low because of the confidence they have in the economy. Now with us, they put a premium. So if you notice, the yield on the Eurobond keeps on going up because the more unstable the situation is, the higher the yield is on the Eurobond. But actually, to a certain extent, it had been going down slightly. I don't know how it's going to fare moving forward. So if I'm going out, sitting across the table from investment funds out there, fund of funds, asset managers, talking about Zambia first of all. Before I even talk about the Kukula Capital Fund, I need to market Zambia first. So I talk about it being a great politically stable country, which is what we've had going for us for many years. Of course, I believe we're still politically stable. I think we're peaceful. We're a wonderful country. But if the Washington Post, the Wall Street Journal, the Financial Times is saying, okay, this is what they're saying. Of course, I don't want to be quoted as I'm just a messenger here. Based on what they're saying is that there's certain catchphrases they use, like dictatorship, like instability, like political blah blah blah. It makes them nervous. And then when you talk to them and you say Zambia is stable, then they say, but I just read this in the Wall Street Journal. I think let's wait until things normalize, And then of course now we have this situation which was necessitated by the fire that took place in the market. I think that also adds to the difficulty in our capacity to raise capital abroad. I mean, this is the reality. I'm taking a very non-partisan approach in this. This is really purely from an objective standpoint. And I'm going to go back very soon to go talk to investors. I'm going to have a tougher battle. I mean, I've done this before, like 4 or 5 years ago, and it was beautiful. I mean, they're talking about Zambia. Oh yeah, you guys just had a peaceful election. You transferred power again. It was a great time to raise capital. It was easy. Now you do a lot more selling. Yeah.
Does the borrowing become more expensive as you go out there and try to just calm or allay fears or whatnot? The resource mobilization, as you call it, does it become more costly to go about?
The terms are more stringent. Okay. And the quantum of the funds that you get is less. So if you're talking to a more like a development finance institution like a CDC, or less risk averse because they're living world, so they see us really so it's easier to talk to entities like that and attract the capital that you need. But just a purely professional commercial investor, they're just not going to touch something that has all these catchphrases around it. It's just a reality.
So as you go out there, doing resource mobilization, what is your value proposition with regards to Zambia? Because I know you mentioned value proposition with as a company you need to have a value proposition.
Absolutely.
So before we talk about from a company perspective, what is your value proposition when you go out there abroad and you're looking to mobilize resources?
Yeah, another great question. So what we first look at is the fact that this is a growing economy. It's a market where it's peaceful, regardless of what people can say about the politics. It's really peaceful, and business thrives in a peaceful environment. You have a very fast growing population. We have a net growth of about 3%. You've got a very high urbanization rate. Now, if you're speaking from the perspective of, let's say, Airtel, where the urbanization, the growth of the population means more clientele to acquire your credit and use your data and so on. If you're in the business of selling noodles, you've got more mouths to feed, more people are going to buy your food. I mean, we've got friends at Capital Fisheries whose businesses have grown significantly over the last 2 decades because of the fact that the population has grown. So it was organic growth on the back of the GDP growth and population growth. So that's really the first. And you get higher yields in these markets because of the so-called risk premium of investing in Africa. So number one is stability, peace. Number 3 is high yields based on the growth prospects. So the growth levels, the populations abroad, there's high buying power, of course, in Europe and other markets like the US and the like, but they don't have the growth rates we have. We are accustomed to, 30% IRRs, and the margins are significantly higher than you would get. If I do a fixed deposit in London or in Toronto, I make like 1% if I'm lucky, 2%. Here, I can make 20%, 25%, which is amazing. So really, the yields are higher. So it's, if you can be trusted. So this is going back to that integrity word. If they trust you to hold these funds, to invest on their behalf, you could do wonders and make really good returns for the investors.
And for yourself.
Yeah.
Going back to governance, as a VC, as you come into a company, most founders feel as though you sort of set up roadblocks for them. So does a VC determine how much a founder gets paid?
If a founder is a CEO, for example, then we have to negotiate a contract. I think a founder has 2 roles. They are a shareholder on one hand. They probably sit on the board, so that's one role. The other role is they're an employee of the company. So, and they should be treated as such. There's been instances where even founders, not to say that they get pushed out, but it's for the benefit of the business. They get asked to maybe take a back seat and maybe just maintain their seat on the board and maintain their shareholding, but let's say not take an active role from an executive.
Day to day.
Yeah. You see that with Google, and it happened where even Sergey Brin and his partner, Uber actually, he just, because it was getting problematic. He just didn't have the capacity to run the company in the most with the highest integrity. I'm sure those issues. So he had to resign, and it was the board that pushed him to resign. So, and it was necessary for Uber's development. The negative news is just too much. And just something I want to touch on, just a quick point. So this is some kind of preemptive. I know because there's also an issue around wealth and so on. One thing I think Zambian entrepreneurs need to be aware of is that you have to be focused. I think this is one thing I did not mention before, which I believe is extremely important. If there's one thing that turns off a venture capitalist is, let's say you've got everything in order. You've got your governance, you've got your structure and everything is good. You've got a good business model, you've got your financial records, but you are over diversified as an entrepreneur. It's the most unattractive thing. It's like, let's say you're a lady being approached by a guy, and the guy is telling you, yeah, I've got like 3 other girlfriends, I mean,
diversified.
Yeah, over that. But well, just for jokes aside, back on the business bit, focus and building competence is very important from an entrepreneur perspective, because there's 4 levels of competence that people go through in their entrepreneurial journey. When you are starting up in a business, in life, in any endeavor, you're going to have what they call unconscious incompetence, which is basically a principle that you do not know what you do not know. But once you start, then you realize that you do not know, which is called conscious incompetence. So that conscious incompetence is what reveals to you. That's the toughest bit, when you realize, I need to learn more. I need to stay focused and stay on the grind to pick up more skills and so on. And then that leads to conscious competence. So you're now knowledgeable of the fact that now you know, because you recognize the fact that you didn't know. And then the last stage is unconscious competence, which is the pinnacle of what leads to success. Is because you end up realizing that it's like the running of your business and creating your value in the business model becomes so second nature and unconscious. So that's really why people need to be focused on one line of business.
That's amazing. I want us to come back on the 4 levels of competence right after this break. We'll be right back.
The Startup Hour, giving entrepreneurs education, motivation, and inspiration from successful entrepreneurs from all corners of the country.
Companies. Jito, before the break, you were alluded to something very interesting, the 4 levels of competence.
That's right.
Maybe we could just run them up, or you can just run us through them again for those who might have missed, and how important they are for one's business.
Absolutely. So level 1 is unconscious incompetence, which is essentially means you do not know what you do not know. So if I start a tomato growing facility, I don't know a lot of things about it, and there's a lot of things I don't know that I don't know. But once I start, there's some things I'll begin to realize that I don't know, and that's when it moves into conscious incompetence. So you're not aware at that point. And then what you don't know, you start building capacity, you start building skills to sort of alleviate the issues around that would impact the fact that you're not competent. Then once you gain competence, you now are aware that, okay, now I know this stuff, I know how it works. So you become consciously competent. So which is a good place to be. That's when people begin to become a lot more successful, because they're more efficient, they do things faster. But the highest level, it's almost transcendental, is where you're unconsciously competent. Now, unconscious competence is an amazing place to be in any line of business. And it comes as a result of consistency. You can't do it when you're running 5-6 different businesses at the same time. If you're focusing on one, then you get to a point where the activities of the business become so second nature, you can do it in double time than you used to, let's say, a few years ago. And that's really an area where you've got. So I think of an example of, let's say, Lionel Messi. He's reached a point in his career where he's been playing soccer for so long, scoring so many goals, so he knows that when the ball comes at a certain angle, at a certain trajectory, he knows how to pick it up and how to take it into the back of the net. And the efficiency levels have increased. Even if you're an engineer, for example, and you've been manufacturing, I don't know, bridges or something of that nature, and you get to a point where you've been doing it for so long and you understand all the different dimensions and what would create a disaster in future, what would alleviate, or how do you sort of mitigate the risk of there being any issues with that. So really, the long and short is stay focused on one line of business, continue to build competence, and when you get to unconscious competence, you will execute, you will be successful, extraordinarily successful.
There's a school of thought that would say that when you reach when you start accumulating a bit of money or wealth, that you diversify. Isn't that contradicting what you're saying?
That's a very good point, and the reason that's a good point is because the misconception is about diversifying in entrepreneurial journeys. I can name 10, 20, I can name 100 entrepreneurs in the US who are publicly known, who are multimillionaires or billionaires, who all made their money from one company. They achieved their unconscious competence, and then what happened at that point is that the money afforded them the opportunity to now invest their money into other things that they don't run. They still maintain running, whether it's Facebook, whether it's whatever. They run it, and if let's say the Facebook guy has shares in Uber, for example, he doesn't run it, he's got a board member who represents him, and his money is in there, there's a management team. So the same way, if you and I today buy shares in Zambia breweries, we're not concerned about, salaries of the workers or how many bottles of beer they've produced or whatever. All you're concerned about is, hey, what's my dividend check? So that's where diversification is fine. It's from an investment perspective, not from an active entrepreneurial perspective. So the key is stay in line of your core business and continue to earn revenues through that, and then diversify your cash and that's where passive income comes from. This is the reason it's called passive, because you're not working in that regard.
Amazing. Going back into governance, we were talking about the founder's salary and how the VC determines it. So at what point is a founder allowed a market salary?
It's very democratic. When you're a VC, you just have one board seat. So you don't come from the perspective of, now we put in the money, so we're in charge. It's not like that at all. We respect the founder, knowing that we need this person to continue, because the reason we invested is because we know that they created this entity. It's their vision, it's their passion. Let's continue to support them, and we are subordinate in a way to them. At least that's the mindset we go with. I mean, of course, there are some minor disagreements, but every great relationship, every great business has that. I mean, I have from time to time fights with my partners over things, but what matters is we've maintained a high level of emotional intelligence where we know that we're working for the greater good of the company. So I think arriving at what the salary is for a founder in our post VC investment is not really a big issue. I mean, there's some founders who say, listen, now that I've got an extra $5 million in my business, I need a BMW, I need my salary doubled, I need my school fees, blah, blah, blah. It becomes crazy. But then, of course, these are things you discuss even pre-investment. So there's no room for conflict.
As a venture capitalist, do you look at the level of competence of a founder or a potential business?
Absolutely. And the competence really is translated in our personal interaction. We start gauging sort of that as you get to know the entrepreneur. The second is the historical aspect of the business. You see how it's been, the trajectory from the last 3 years. You can see like where it's at now. It's as a result of this person's competence is increasing. And after a while, and even I believe, I know I don't want to sound arrogant, but I believe that in this field I've achieved a level of unconscious competence, because there's some things I can pick up, certain red flags and certain nuances that come out in a conversation, in a meeting, where you know that this is not viable, this is viable, this is going to be right, this is going to be wrong. It's sort of there. So in a way, it's difficult to explain what it is, but after a while, you tend to kind of you understand it. Yeah.
Speaking of that, let's talk a bit about your competence levels and looking at the market, that is the Zambian economy as a whole. You alluded to the fact earlier that you do a lot of market research and obviously the different sectors of the economy. How do you see the different sectors right now? There's a lot of talk of, no, we need to diversify into agriculture, into tourism, into this and this. What do you see on the ground? Okay. With all these market studies that you do.
Yeah, I believe that there is, we're like a blank canvas. We are so far behind the Western world. If you compare any sector from telecom to logistics to agriculture to you name it, every sector in this country has so much room for growth, because we're not just decades behind the Western world, we're centuries behind. We are, unfortunately, it even sucks to say this, but our continent, the sub-Saharan Africa, is the poorest part of the world, and the level of poverty and the lack of infrastructure that we have is a massive opportunity. This is why I believe that over the next decade or so, there'll be a high number of multimillionaires coming out of this part of the world, because of the fact that the gaps that are required to be filled in regards to infrastructure, from power to logistics to you name it, will be filled by entrepreneurs here. And the need for fast-moving consumer goods, rapid urbanization. There'll be, immense challenges that the urban sort of sprawl is gonna bring. So, for example, movement of goods and services will be difficult. There'll be immense traffic. Water reticulation will be a problem. It already is a problem now, but it's going to continue to increase. Connectivity is going to continue to also become an issue, because there'll be need for more investment in that to facilitate more usage of that, taking on, of course, healthcare, just every single thing you can think of, every product, every service. But one thing I have to mention, this is a controversial thought. I have to sort of premise this by saying I love all people. I don't have a mind that is prejudiced in any way, but I'm a very proud Black African, and I believe, and I am very particular when investing. I want Black Africans, Black Zambians to succeed. I want them to be millionaires. In fact, one of my personal goals is that I want to develop 10 Black African millionaires in my lifetime, and I know I'm going to do it because I think I've kind of already done one.
And I'm number 2.
No, actually, number 2 is about to happen very, very soon, I think. And then you could be number 3. Who knows?
I'm number 3.
And I'll tell you this. I'll tell you why. Because of how far behind we are. If you look at this economy, we don't control this economy. This economy is controlled by, essentially foreign entities. And if you were to do I've actually been doing some back of envelope studies. Zambians sit on maybe 5% of this economy. The top 100 companies in this country are all foreign owned. Top 100, almost entirely foreign owned. Our exposure as Zambians is very limited. We could be free politically. We could fight each other in the political battlefield all we want. But the fact that we don't control this economy is a problem. And we need to step up and start, lifting each other up. I want to facilitate. This is the reason I'm making, there's an important meeting I was meant to be on earlier, but I decided, you know what, I need to share some of these principles with the listeners, because these are things that I hope 1 or 5 or 10 people are going to be inspired by this. That, you need to get up, you need to seek information, you need to focus on your value proposition and think of yourself, think big. I mean, if you look at Nigerians, look at other cultures, they're doing so well, and I've nothing against other cultures doing well, even in Zambia, but this is our country, and if you don't own your economy, you don't own a thing. We're just passing time and we're robbing future generations of wealth.
Still on the issue of research, and you said one needs to do their research. If you got young entrepreneurs listening out there and they want to be the next, for lack of a better name, the next Dangote, the Zambian Dangote. Yeah. What do you tell them? What value proposition should they have, and which sectors should they keenly look at? Maybe invest in their time, energy, and money, resources.
I think where we expect the most amount of success to come from is from the agricultural sector. Services around that, from logistics, is going to produce a lot of wealth. So you've got farmers who will be growing the maize, the wheat, who will of course be the first, the most at the primary stage of the value and supply chain. Then following that, you're going to have transporters. Then you're going to have the suppliers of the fertilizer. Then you're going to have let's say the suppliers of the irrigation. And so you've got so many linkages. Then you've got the processors, the millers. Then you've got the guys who do the packaging. Then you've got the different markets who are in need of this commodity. I mean, we have so much water resources in this country. Another sector, I'll tell you, financial services is going to boom. It's a really fast growing industry. Right now, there's about 60% of our country that's unbanked, and a lot of people in poverty. And I know that in a short space of time, as we begin to learn how to manage our resources better, will enable more people, particularly in the rural areas, to have access to, for example, mobile money, which is going to be, of course, a new age of banking that's accessible, that's ubiquitous. And that's going to be a platform where entrepreneurs can create value and get paid, even at a distance. And so, I mean, people could use their imagination and just stay focused, keep tinkering away, whatever you're doing. There could be a guy right now in a basement somewhere trying out to create something, the same way Zuckerberg was doing in his dorm room, or the way the Google guys were doing in their parents' garage or whatever. There's somebody out there who I want to help one day, with a serious investment. And if they need one day to get to a point where they can now, I mean, of course, the trouble is, and this is a disclaimer, we don't invest in startups, unfortunately, but I want to advise people on how to get started and get to a point where they don't need $30,000 or $100,000. They need $50 million or $10 million, which we can facilitate. And that's where we need to go. And that's how we essentially take control of this economy.
Essentially, how do we do that? Do we start by having many startups, or how do we go about having economic ownership?
I think the one thing is government can play a role in a way. I know the BEE is kind of controversial, but when you have preferential procurement, preferential access to let's say regulatory So let's say, for example, if ZDA decided that you can't get an investment license as a multinational if you don't have, let's say, 25% shareholding from Zambians, and then the second is you can't get fiscal, benefits like tax holidays, whatever, if you don't have, let's say, Zambian shareholding. That's one way to access where people buy in. So you're not just being given shareholding, you buy in. The other is you can say that, you know what, the supply of fertilizer should be for Zambians, or the supply of the logistics for, let's say, that I think they tried to do something like that where in the tankers that were bringing in the not crude but the refined oil into Zambia, I think there was an issue around preferential procurement for Zambians. So you start building capacity and enabling more Zambians to have access to cash through preferential procurement. And then the other is large scale funds like NAPSA, for example. NAPSA sits on billions of dollars.
Yeah.
And if they had a mechanism, and I know they've recently changed the investment model, their investment guidelines, where they can say now they can invest in private equity and SMEs and so on. So they look at, let's say, take a Zambian entrepreneur who's already advanced, like let's say Costin Chilala, for example, who's in the agri space. You empower that person. You take another Zambian who's in the banking sector, like the Invest Trust guys. You empower them. You take the Madison guys, Lawrence Gutu and them. You empower them to become giants, corporate giants in Zambia, who will then, through them as Zambians, they won't be capital flight because they are based here, so their money will stay in the country. So, and this is what Korea did. I mean, the Daewoo's and the Samsungs and all these, they all came up because the government realized that there's only 4 families who have the capacity to do certain things at a certain level, and then they created industry that spawned into so much. So if I become, I don't know, a billionaire, for example, I know for a fact that a lot of people will be beneficiaries because all my money will be spent here. I'll invest in more. I'll be more of an angel investor outside of the low risk venture fund. I'll take, so if let's say Mwape comes to me with a crazy idea which no professional investor will invest in, I'll take a chance on him because I've got the capacity to do so. So it starts with having strong Zambian figures in the corporate space or in the entrepreneurial and industrial space who can build local industry that creates these sort of adjoining industries. So for example, one last example is First Quantum. When they set up in Solwezi, they brought in the investors who did the hotel. They brought in their own logistics companies. So you find that there's a lot less Zambians who are supplying to that. Now, if a Zambian owns a mine, for example, then I'm going to be looking at, Patrick has a company that supplies mill balls, which crushes the what you call this, the rock, the ore. Then I'll prefer you because you're one of my own. The same way they support their own. And it comes down to that. It comes down to being tribal, and when I say tribal, I mean Zambian. Tribal in favor of your fellow Zambians. So that's really the key. Yeah.
Just a quick one before I let Mope come in with the final question or two. When you look at the tourism sector or the construction sector, what comes to mind? There's been a lot of talk of tourism, the untapped potential. Yeah. We can increase tourist arrivals by the millions. Well, how do you see such sectors, construction? Because they say the construction sector also kind of like gives you a gauge on how the economy is faring. Yeah,
that's true. I'm not particularly crazy about those two industries for some reason. I think the first reason is the construction has the dark side of construction in Zambia is that it's too government exposed, and most construction companies that only do private sector construction don't have enough deal flow. There aren't enough, let's say, malls. Okay, of course there's a lot of malls coming in, but then you find that those guys are bringing their own contractors from South Africa and the like. But locally generated construction projects are quite minimal. So I stay away from anything that is going to require, doing a government tender or something like that. So that's the reason why I don't talk much about construction. Perhaps I know it's highly profitable and many people who are in construction make a whole lot of money. Tourism, I think, is very attractive. As a country, it's definitely within our priority to ensure that we increase tourist numbers. I mean, you make foreign, you build up your foreign reserves, and of course it's a great earner. There's some countries who are completely dependent on tourism and they're extremely wealthy. I mean, their GDP is infused with so much tourism value. The reality is, and I'll be completely honest with you, I don't have a lot of knowledge of the tourism sector. The risk factors when it comes from an investment perspective in tourism are quite high, actually, and for that reason we don't really have a lot of interest in that sector. So I've not spent too much time assessing that industry, but I do understand from a macro perspective of why it's valuable. But from a micro investment perspective, I'm not too sure. I'm still gauging. I'm still building the competence in that area. Yeah.
So in other words, the idea of maybe buying shareholding into a major hotel or into a golf course and a resort of some sort by the water, would it entice you?
It's the thing is, we want to invest in things that have some sort of a captive audience. Of course, we understand Sun International. I think it changed hands recently. There was an investment not so long ago. So I know that the type of money that goes into those sectors are very specialized funds that have a more of a tourism / real estate sort of mindset. A golf course which is associated with the housing development could be interesting, but then the reality is a housing development with a golf course is really in the high sort of high range, and I imagine that we aren't there yet in terms of having Zambians who have that sort of capacity to acquire entities of that nature. So it's still an area where I'm still a little bit iffy about. Yeah.
Amazing. Talking of the funding gap that we have in Africa, in Zambia as a whole, what do you think of people on the ground coming together themselves, developing their own trust? Say, me and Patrick come together and we put together, he puts 50, I put 50, okay, this is our trust for building houses. Yeah,
that's a fantastic, in fact, you know what, I know a couple of Kenyans who did that, and they built an amazing company. This company is like Transcentury. It's listed in the Nairobi Stock Exchange. It's run by some, local Kenyan. It was initially an investment club in a way, where friends come together. They know how asset management works. They know that if I've got 50,000 kwacha, I want to do a fixed deposit at Stanbic, whatever, and I'm gonna make 10%. But then if you have 50 and we come together, and Stanbic says, okay, because you're putting 100, we'll give you 15% instead. We both win. So the model is, if we bring Patrick on board and more friends, and then now you have 10 million kwacha, and then you go fix it in a fixed deposit, and then the bank is willing to give you 25% because of the fact that you're putting in so much money fixed for a year or thereabout. It essentially means that we'll all walk away with a slightly higher amount, per rata. So I think more Zambians need to come together and trust each other in terms of putting money together. Of course, you can build systems to ensure that no one's stealing or anything like that. So I think it's phenomenal. I obviously did that with my colleagues. Kukula Capital happens to be that.
Exactly.
So I do it on my own, in my own sort of private life. I try to do some angel investing and get some friends on board, and so I think that's something we need to encourage.
Okay, a quick one. A McKinsey report outlined 2 scenarios for future growth in the Africa-China relationship. Under a business as usual scenario, revenues of Chinese firms could grow to around $250 billion by 2025, up from $180 billion today. Chinese firms could rapidly accelerate their growth, expanding into sectors including agriculture, banking, and the likes. And they'll probably reach about 440 billion. At least that's what the study says. So should we, as the African or the Zambian Tamanga, be worried of the Chinese dragon?
Yes and no. I think we need to reconfigure our relationship with China. I think it's a great relationship. I think we've benefited from it for many years. They're the first to take a chance on us when the Western world weren't really too keen on Africa. I mean, our first major infrastructure projects as Tazara was aided by them, and a few other projects, even this government complex and the like. But when I say reconfigure, they have enormous capacity to execute construction projects in a massive scale, which Africa needs that sort of infrastructure. The second is we need capital. Now, my biggest problem is capital flight. If Chinese firms are consolidating their position in this market, growing, becoming stronger, and taking up spaces in agriculture and other areas, 100% by the grace of God. I mean, I'm not the most intelligent person. I'm not that special. Most people who know me, I'm a really simple guy. I'm a goofy guy. But the reality is, I've been placed in a very extraordinary circumstance, even though I'm an ordinary person. And that was done for the reason of service. I need to serve my country. I need to serve the less privileged. I mean, this is the reason I'm a Rotarian. I've been rocking my pin over here.
Yeah, I can see your pin.
Yeah, and that's the reality. Is I would tell my younger self, just trust God. He's got you, and everything will be okay.
Nice.
Awesome. Take note that tomorrow on the Startup Hour Junction, host Noah Nkoma is the guest. From selling chickens and eggs at Mutendere Market, Noah is now the managing director of Better Now Finance Company, BFC, a wholly owned Zambian institution which was established with a simple vision to offer better access to credit to everyone living, working, or engaged in entrepreneurship. BFC has mobilized and grown, and the company is currently standing at $5 million United States dollars in market valuation, opening several branches over the last few years. BFC's goal is to grow this to $8 million by the end of 2017. So come join us tomorrow at Procha Hotel Arcades, the Panbrick building. We start at 17:30. Charges are 20 kwacha only, and remember to bring a friend. Thank you for tuning into the Startup Hour show. Jito, it's been an informative and insightful session, all rolled into one.
Thank you.
It's been a pleasure having you in the studio today on the Startup Hour.
Thank you so much for having me.
We certainly hope
Really
to see you
appreciate it.
again in the near future.
Yeah, most certainly. You guys holla. I'll be there.
Awesome. Be sure to catch us again next week, same time, same day, as we bring you more influential business and thought leaders. Be inspired, and remember, the only person responsible for Zambia's development is you. So what are you doing about it?
This has been Startup Hour, bringing successful Zambian entrepreneurs, policymakers, and subject experts to share their stories. Startup Hour, in association with Power FM.